Hey everybody, Jake here with TrendSpider to go over the weekend update into the second week of March. And a lot of chop this week, not a lot of movement. You had some big moves up, you had some big moves down, all driven by the Russia news. So this is a very news-driven market. And technicals always matter, no matter if it's a news-driven market or if it's just straight trending. And so, as always, we'll look at some of the levels to keep an eye on in the broad markets, go into some crypto, and then go into some individual names, starting with the S&P 500 ETF SPY. One thing that I did want to do here is actually pull up the seasonality for a lot of these names as we do get into a new month. We did just have the monthly candles close. So one thing that I'll do here, especially for the S&P 500, I'll anchor the seasonality from 2009. So that's pretty much the bottom of the 2008-2009 crisis. So we want to know, how have things trended since that big reset in the market? We could do that from the COVID lows, but we'd only have about a year and a half of data. And if we're looking at month by month seasonality, you're not going to get a ton of data points there. So going into March, you can see here that we do have a 57% win rate going into the month of March. April is really your big month with a 92% win rate. So will this be a buy the dip month? We'll have to see. We do have a lot of things in play that we don't necessarily have always going on. War, interest rates rising, those types of things. But for now, you can see here on the daily chart, we are in this downward sloping channel here, slightly broadening wedge, if you want to call it that. It's not perfectly parallel, but you can see here that we did kind of retest the weekly lows here almost perfectly. We give or take, let's say $1 or so on the daily chart. And then on the weekly chart, you can see here that this anchored VWAP zone here, this pre-election low is where we're anchoring from. This was kind of your reset before the elections. And you can see how well this 2.5% offset has acted as a level of interest for buyers. You've seen multiple, literally for weeks on end, we were bouncing here going into 2021, and then we kind of took off from there. But going into this current year, you can see that this has been an area of interest as well. We've bounced here multiple times. We've undercut this area once. That was last year, but we did hold it again this week after a pretty volatile week. But really, you can see we ended up pretty much exactly where we at least opened, but we did close down for the week. So all in all, we are watching this zone here, this blue zone to hold, and we'll see if that holds going into the week ahead. You'd want to see a break of the previous high of this week for a continuation up next week, and you'd really want to see a break of this week's low for a possible retest of that VWAP down here, which is shown by this darker blue line, and that's right around, let's say, 420 to 419. Going into the Qs, pretty volatile as well in the Qs. You actually have bigger moves here on the Qs side of things. And if we anchor volume by price from the swing high here, you'll see that we do have a lot of overhead supply. So what we're going to do is we're going to move this to the swing high. So we're measuring the volume distribution since this high point here back in late December. And you'll see that we have a lot of supply here. So we had trouble getting through the supply zone, and then we continued to move down. So going into next week, this 345 to 347 area is going to definitely be a heavy supply zone above. And you'll see here what's interesting is notice what you can do with the VWAP. This is a trend zone that I've drawn. You can see that it's held really well, and I think I even had this on the last video. You've had this area hold 1, 2, 3, 4, 5, 6. And then this is the 7th time we tested this and actually closed below the trend zone. So that is something to definitely keep in mind. However, we did actually hold the VWAP of this trend zone. So you can actually anchor the VWAP from the start of this trend zone, and you can accurately say this blue line right here is the volume weighted average price of the trend starting from what is that? I think that's around August of 2020. So all in all, we did close below this trend zone for the first time pretty much since the start of this trend, but we are holding the VWAP of this trend, which is simply just this blue line. You'll see here that March has a 57% win rate since 2009, pretty much the exact same that we've had since January. So not a lot of edge looking at seasonality, but do notice that that spike in April with a 77% win rate. So we will keep an eye on that going into the weeks ahead into April. Now looking at the IWM ETF, which is the Russell 2000 ETF, which is IWM. You'll see here if we do the same thing that we just did in the Qs from the swing high, we did actually get above this area, this point of control and this kind of shelf here. So I'll highlight this area here. This is where you have a lot of volume holding within this $200 range. Also psychological area, but you'll see here that we did close below it. So going into next week, this $200 area will not only be a psychological level to get above, but it will also be an area where you do have a lot of supply up here. Remember, anytime the price is below one of these volume nodes, that volume node is going to initially act as supply because that represents shares that are technically down on their position when the price is below that volume area. Now, on the weekly chart, you'll see here that we have held the COVID low VWAP really well the last couple weeks. So pretty much since the start of the year, you can see we've almost tested this area perfectly. And this would be an area where you may want to add a little bit of a percent offset here. So notice here, this candle right here, we did not test this exact area. And notice here, we did not test this exact anchor VWAP. So this is when I would use essentially a zone. So I'd go and add a percentage band. And in this case, let's do just a 1. That means that you're offsetting the VWAP by 1%, meaning you're essentially adding another VWAP 1% above the original one. You'll see here that now it's actually capturing some of those wicks that did not calculate, or excuse me, not calculate, but didn't actually test this exact VWAP before, as I just showed. So, give or take $1 or $2 around 188 is going to be your area below to hold. And then you definitely want to break the high of this week, which is right around here. And that is right at, let's say 205, give or take 10 or 15 cents. Going into March, you can see we have a 64% win rate since 2009. So nothing too crazy there. And then April does have a high win rate as well. But remember, we are in kind of a weird time. We've got rising interest rates. We've got geopolitical news really affecting the market. So keep in mind that this seasonality did not occur when these types of things were happening over the last 13 years. So that's always something to consider, the current state of events and the status quo of the market. Now, looking at some crypto was really interesting towards the beginning of the week, where you actually had Bitcoin really decoupling from the S&P 500. So on these videos, I say a lot, Bitcoin is really a gauge of liquidity in the market, kind of a high beta proxy for the overall markets. And you actually saw a big disconnect when you initially had all these sanctions taking place, where all these transactions going to Russia had to essentially be converted into crypto. And so you had a big rush to convert into Bitcoin, Ethereum, pretty much all crypto got that move. And now Bitcoin is kind of moving back with the market. You've seen the last couple of days, we've had a pretty big move to the downside on Bitcoin. That could simply just be because there's less demand, crypto having to be converted to send money to Russia or away from Russia. That definitely did create a big spike of demand here, which was around the 27th, 28th. So we'll have to see if this anchored VWAP holds from the COVID low. Remember, I do have an offset here, same exact way that I used it before in IWM. I'm just capturing some of these wicks that did not hit the actual VWAP here. This is your original VWAP, this darker blue. And then this brighter blue here is the offset. And you can see it's really just eyeing it, right? And trial and error. I didn't just randomly put an offset here to capture this. I had to go in and see, okay, what percent is that where I'm capturing some of these wicks? And so we are holding above this area. That's something to consider. Some may call this a potential W bottom forming, but there's still a lot of time left in the weekly candle for crypto, as it does close on Sunday instead of Friday, which is when we did this video. Ethereum is the next one. This is the second crypto we'll look at before moving on to some individual names. And really kind of the same thing here. You'll see here on the daily chart, we definitely did have a really strong rejection off this diagonal area. Diagonal zones are incredibly powerful. Some people, say that, they don't hold as much weight as horizontal levels, but you have to remember the market is made up of a lot of participants. You don't need every single participant playing diagonals in order for the diagonal area to make the market. You just have to have enough participants looking at that diagonal zone in order for it to be relevant. And so that's what we saw once again this week. Strong move down after testing this, tried to break above it, but never got that daily close above this resistance zone. And now we're right back down to this volume shelf, this aggregation of volume nodes here, pretty much showing that a lot of these shares well, not shares, excuse me, we're talking about crypto at this point. A lot of these coins, whatever you want to call them, are pretty much back to break even after being up quite a bit when we were trying to break through this resistance zone. So we're back to break even for a lot of these volume nodes here. That's just participants that essentially bought Ethereum around 2,600 to 2,650, and we'll see if this area holds going into the rest of the weekend. Now, the September 2020 low has been a really relevant anchored VWAP, and that's why I'm using this instead of the COVID low. And you'll see here we've tested this area multiple times. As we were moving up, this area acted as kind of an area for the price to bounce before really moving up in November and December of 2020. And then into the summer of 2021, this is where we did finally bounce. And you can see here once again over the last several weeks, we've also bounced here, and we have not actually closed below this September 2020 VWAP. So it is still very relevant. And as I mentioned with Bitcoin, some may call this a potential W bottom trying to form, but we will let price action dictate that rather than our opinions. But so far, not a great look for crypto going into the weekend based on this current daily candle that we have. Now, for Ethereum, we can only go back since 2016. That's all the data that we have, at least for the Coinbase data here. We can go back to May. But you'll see here, March actually has a 100% win rate for Ethereum since 2016. So this is statistically a very strong month. 100% win rate means that since 2016, March has closed higher than February's close 100% of the time. So every March since 2016, we've closed higher than February. And then look what happens into April, May, June. We do have that sell-off. And that's kind of what you saw last year too. We had a really strong move up in March. We topped out in April and then moved down for the next 2 months into May and June. So seasonality is very important when you are looking at crypto. And we'll just have to see how this plays out going into the rest of the weekend and the month. Now, going into some individual names, we're just going to do 5, starting with Tesla. Tesla is one of those ones that really didn't do a ton this week either. You did have that really strong move up towards the beginning of the week, and then you did start to kind of chop around after that. But notice here that we do have this resistance zone. And for now, you could just call this an SR flip. An SR flip is just when support becomes resistance or resistance becomes support. You can see here this previous resistance zone. If we point it out, 1, 2, 3, finally broke through it here, closed above it at least. And now we're just retesting that resistance, potentially acting as support. So this could easily break down and continue down. But for now, it is holding that area. If you did anchor a VWAP from this capitulation point, you'll see that we bounced off that area perfectly on Friday, today. Now, on the weekly side of things, you'll see here that if you anchor the VWAP from this important May 21 low, we are still closed below that. So this was actually acting as a pretty heavy level of support over the last 6 weeks. It held support about 3 times. We finally broke down, and now we didn't close above it. Now, this is a great time to turn on the raindrop charts here. So you'll see here, pretty much anytime you have a wick like this, you want to see what was going on within that wick. We don't want to go and spend 10 minutes going through the daily chart to see where that volume came in. If we just turn on the raindrop chart and look at the raindrop version of this candle, you'll see that within this wick, you actually had a decent amount of volume. What's really interesting, though, is notice over the last 7 weeks, you have had a red raindrop every single time. So in this case, notice just because you have volume at the top of the range doesn't necessarily mean anything, at least for Tesla, right? So in this case, you can see we had volume at the top of the range a few weeks ago, and we continued lower. So just because we have some volume located at the top of the range for this week doesn't necessarily mean that we're going to go up. It's just showing where that volume was located. A lot of that volume was absorbed near the top of the range. And you can use raindrops in the analogy of kind of looking at the market as a sponge. And those raindrops will show where that volume is being absorbed within the market by essentially buyers, because for every buyer, there's a seller. For every seller, there's a buyer. But that volume occurs where buyers have enough conviction to actually make that transaction to purchase the security. If there's no buyers to step in, the price has to continue to drop until buyers actually absorb those shares. So in this case, you can see here, we have had a lot of volume at the top of the range multiple weeks in a row. So who knows? Does that mean that, there has been conviction by buyers and we're setting up for a move to the upside? We'll have to see. But if you look at the seasonality, pretty much since 2016, March is a very weak month, but going into April, you've got a very strong time of the year. Now, if we go back since the IPO, since 2010, you'll see March also is still not a very strong month with only a 42% win rate. You still have a little bit of an increase there for April with a 64% win rate. June is your highest win rate with an 82% win rate, which simply, as I mentioned before, just means that 82% of the time, June closes higher than May's monthly close. So going into the next one, we have MU. And if you trade or do anything with MU, you will know this thing is really a bucking bronco. I mean, literally on Wednesday, we had a 9% move up. And then on Friday, we had a 9% move down from the lows. So this thing is just absolutely crazy. Now, if you look at the anchored VWAP from the trend zone, and this is essentially saying this is the volume weighted average price of this trend, since we're starting the VWAP right at this the start of this trend. We did break down through it. So if we broke down through that, then this trend zone below is definitely going to be an level to watch. And for now, we did get a slight bounce on Friday off this area. We'll see what happens going into Monday. But this one is definitely not for the faint of heart. You have some insane moves on this one. And this one is, it's a semiconductor stock. It does move incredibly strong when it does make a move. And you can see here on the weekly chart, we do have this large ascending triangle still forming. So we're getting close to the apex here. You can see this apex is just pretty much the tip of this symmetrical triangle, or excuse me, this ascending triangle. Ascending triangle simply means that you have higher lows here on the price, that's shown by this diagonal green line. And then your highs have pretty much topped out, shown by this horizontal line. And that's what creates the ascending triangle setup. Now, in March, you can see that since 2010, let's just anchor it from 2009, kind of the bottom during the financial crisis, March has a 50% win rate. So not a lot to go off there, but you can see February has a 71% win rate. And if you look back at the monthly candle on for February of this year, we did have a green close. So going into March, not a lot of edge using seasonality, at least with a 50% win rate. And really the next few months, it's pretty much, pretty even as far as, green and red months. Going into Amazon is the next one. This one is really starting to get close to breaking down. So if you want to draw a very kind of basic trend zone here, I'm just connecting this wick to this wick here, extending it, and then I'm adding a little bit of a zone here to capture some of these wicks here. So I'm connecting this to this, and then I'm increasing it to capture this, this, and this. So instead of just being a 2-point line, now you have a 5-point zone, which makes that area much more significant. Now what we can also do is we can connect this wick here to this wick here and extend it out, and then do the same thing. And you'll see here now, instead of 2 points, we have 1, 2, 3, 4, 5, 6, 7 points. So you can see it just becomes a much more relevant area. So if we extend these out and kind of create the actual symmetrical triangle here, you'll see here that we are getting kind of close to the apex of this symmetrical triangle. We still have a lot of room that we could literally just chop around. So if you do like to try to play just the bounces around this area, go for it. But a lot of people would likely wait for a break to the upside or a break to the downside to really get some conviction in this move. Now, Amazon going into March and April does actually have an increasing win rate. So you can see here that March has a 71% win rate. April has an 85% win rate, which is the highest win rate of any month along with November. But you'll see here that we've got this really long term why do I keep saying symmetrical? I don't know. Maybe I'm just thinking about symmetrical triangles right now. You can see here that we've got this really long-term support zone. And so pretty much what I'm doing is I'm just starting it from this point, and I'm connecting it to this point and extending it. And you can see we've really tested this area starting here. 1, 2, 3, 4. Now we're entering it once again. So if we do break down through this area, then the next zone that I would expect this to get down to would be around 2,500 or so, which is essentially the VWAP from this high back in 2018 and then this low back in 2018. The volume weighted average price really is right around this 2,500 area, give or take, $25 on each side. So this is definitely something you want to be kind of keeping an eye on for potentially a break or a hold. Now, if you want to maybe start it from this 2015 low and you want to connect it to this point, technically we've already broken down. So it's really just depends on how you want to look at this. But for me, this doesn't have as many points as this line right here does not have as many points as this line right here. So I'm looking at this line a lot more. The more points that you have on the line or the zone, the more important it is to me. That's why I'm starting it from this point, because we do have a lot of instances where price did bounce here and respected this area. So all in all, if we hold this support zone, maybe a retest of the highs, which would be right around here, shown by this orange line, which is around 3250. And if we do break down, as I mentioned, these VWAPs below would be your target, and those are right around 2,500, as I mentioned, give or take $25 on each side. Moving on to the next one, we have Disney. Disney is one that actually already made the move through the symmetrical triangle. So you can see here that we did start to break down. If you anchor a VWAP, meaning that we're starting the VWAP from this candle here, we broke down through this again. So that is definitely not strong price action going into the week ahead. And then you can see here on the weekly chart, just a really ugly weekly candle. We pretty much gapped into this previous wick. We gapped down into this wick and then pretty much tested the wick low and a little more. So anytime you have a gap into a wick, generally expect you're going to at least test the bottom of that wick, and that's exactly what we did here. Now going into March, 50% win rate since 2009. If you want to maybe anchor it from 2016, which was also an important low in the markets, you can see here it's even lower. So 29% win rate for March, so not a strong time of the year for Disney, but April, along with a lot of the other names that we saw, is a pretty strong month for the market with an 83% win rate since 2016. So if you want to look at seasonality, I personally am looking at seasonality since 2009 because that was really, if you want to call it, the great reset in the market before we just started this massive bull run. But if you look at the charts, you'll also see 2016 was a very important pivot point before we started the next really big leg up into 2016 and beyond. And as I mentioned, you don't want to use the COVID low because if you're looking at the month by month, COVID happened in 2020. You don't have enough data points to get any type of really decent survey size, there, or data set there. So if you're looking at 2016, you at least have about 5 or 6 years of data, depending on which month you're at. So if we look at January, we've had 6 years because we already have January of 2022 happen. If you're looking at March right here, you actually may want to remove sometimes the current year. So if you remove 2022, you'll actually see a 33% win rate. Why? Because it's counting the current month right now as if it's already closed. So since Disney is red on the month, it's counting it as essentially a red month. So you're getting a lower reading here. So if you do want to exclude the month you're in, because the system will actually take that into account and count that month as red or green, depending on what it is, just exclude that current year. So here, if you don't want to include March's red month because the month hasn't closed, just exclude 2022 and you'll see that this changes. So that is something to look at. I don't really look too deep into it because generally I'm looking back since 2009 and it's really not going to change the data that much. But if you do want to be, exactly accurate, definitely exclude 2022 if you are looking at the current month and we're still in it. Going into the last one, Apple. Kind of an interesting thing here. So I want to actually explain this a little bit. So you'll see that this symmetrical triangle is not drawn the same way as the other ones. I didn't connect the wicks. That's because I actually drew this based on the line chart. So notice here, if you're looking at the line chart, I'm connecting the closes. So anytime you're using a line chart, you're actually just looking at the closes of that day instead of the high or the open or the close, or excuse me, the high, the low, the open. You're just looking at the close. So in this case, you can see this symmetrical triangle is still forming. And you can see here that technically we're still within it. If you go back to Amazon, you'll see that we are actually not within it if you were to connect the line chart. So if we were to do this, so what I would do is I'd connect this close to this close and move this around. So technically, if you wanted to use the closes here, it's gotta make it perfect. We have already technically started to break down on Amazon, and that's just using the closes here. And as I mentioned, you gotta be kind of surgical with this. So here, I'm connecting this close to this close and extending it, and you can see that we have close below it. So technical analysis can be very subjective. So it's really what you're looking at. If you're looking at a hollow candle, you're going to be using different points. And if you're just connecting the closes on a line chart, which is just looking at the closes. So just remember, there's no perfect way to do technical analysis. It's just however you're looking at it. If you want to really value the closes, then maybe you want to use the line chart. If you want to just look at the extremes, the wicks, then you probably want to use hollow candles. So it's completely up to you how you do it. There's no right or wrong way. It's just if your strategy stays consistent, that's what really matters. So going back to Apple, if we are using the closes, and the reason why I actually use the closes here is because if you look at this hollow candle, you'll see that last 1, 2, 3, 4, 5. So last Thursday, we had this just crazy candle here. And if you just look at the line chart, that's the raindrop chart, you won't actually see a break here. You'll just connect, you'll essentially connect these points here. So it really just depends how you want to look at it. In this case, if we go back to the hollow candles, notice that this completely invalidates. But you can see here, I'm pretty much getting 1, 2, 3. This was your close 4, 5, 6, 7 points here. So that's why I chose this particular area. So when you switch over to the line chart, you would have to kind of change this up a little bit. So, if you wanted to connect close to close, it would look more like that. So just keep it consistent whichever way you are doing it. And so that is something to keep in mind. We are still within the symmetrical triangle here on Apple if you're using the closes, but some of the other names have already started to break down. On the weekly chart, you'll see here that we just talked about this on Disney, where we did close and open within this wick to the downside. So if we were to go by that logic, we could easily retest this support zone below. And just check out this wick. That is just insane on last week's candle. So if we do continue lower, possibly a retest of the 150s, which would be just a pretty perfect area to bounce. Notice we've had that here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And then on the upper part of this, 12, 13, 14. So this is a very strong support zone here. It's interacted with wicks and bodies a lot. And so if we do move back down here and break below it, then that would definitely be a pretty important zone. Now, going back since 2016, you'll see the seasonality for March is 57%. If you wanted to measure it, get a little more in your data set, your data points here, you'll see here since 2009, you've had a 64% win rate for March and then a 69% win rate for April. So regardless, you are going into a little bit of an increasing seasonal time of year, and then it does drop off into May and June. So sell in May, go away is actually kind of a thing if you're looking at seasonality for Apple over the last 13 years or so, with June having a less than a 50% win rate. All in all, technical analysis, as I mentioned, it can be very subjective. just keep it consistent based on what you're doing. So, that's something that you can do simply using auto trends on TrendSpider. I didn't use auto trends here, but if you are maybe newer to drawing trend lines and you want to keep things consistent, remember we do have the auto trends feature. And remember, if you are drawing trend lines, make sure that your timestamp is always up to date. These trend lines, some of them are relevant because this was drawn back in August of 2021. So if we refresh and lock this, these are going to be all the trend lines based on these preferences that you have. So if you want to connect bodies instead of wicks, these trend lines are going to change a little bit. You can see that with that kind of analysis, all of a sudden you've got just this huge broadening formation here. So it completely depends on how you draw them. And that's what I mean. Technical analysis, especially trend lines, can be very subjective. And that's why you just have to find the trends that work for you and then keep them consistent. And if you are trying to keep things consistent and remove any bias, definitely check out the auto trends on TrendSpider. And you don't have to keep these on the chart. All I did here was I double-clicked this line, double-clicked that line, turned off the tool, and these are the only ones that stay on the chart. And obviously this green and red trend zone also stay on the chart because I annotated that myself. So if you have any questions, you can always comment and ask a question below. If you do have any questions regarding getting set up on the platform with the 7-day free trial, you can reach out to hello@TrendSpider. You can send us a DM on our Twitter account, just @TrendSpider. And remember to like and subscribe if you enjoy these videos. We try to do them twice a month to give you guys an update in the market, but also show you how you can use the platform to get just a lot of information at once using TrendSpider. Thanks so much for listening, everybody. Hopefully everybody's staying safe. Our best to everybody in Europe and Ukraine that are really dealing with this, and even to the Russian people who are really dealing with a lot of these things kind of out of their control. So it's kind of a crazy time in the world. We hope everybody stays safe, and the main thing in life is really just to be happy with where you're at and comfortable. And if you've got that, you're really doing pretty well. So that's all. Everybody have a great weekend, and we'll see you on the next video.